Hello, this is Sam Wong from Financial Services Analytics Team LLC. Hope things will go well for you for the weekend, and you have a good time. And last week the market was seems to be very high volatility, but yeah, it's still up. After 3 days of gain, Nasdaq pledged 3.7% on Thursday. Its biggest single day loss since September 2020. S&P dropped 2.4%, the worst fall in almost a year, and Dow slipped 580 points. But however, Friday, despite the Treasury yield actually reached 1.8%, maybe it's because by the dip, market was just oversold and people trying to also cover the short position. The market you actually slipped at the beginning and then you start rebounding. So at the end of the day, it was gaining. So for the week, again, it's good to do a weekly recap. That actually it was positive. Dow Jones Industrial Average was 1.15% higher than the previous week. S&P Nasdaq was 2.07% higher than previous week, and S&P 500 is 1.55% higher than previous week, and Russell 2000 also 1.74%. So Friday was a remarkable time, and you can see that it started from the dip, and actually you kind of at the top, and then you slip, and then you bounce it back and all the way, and then before end of the market, before the bell close, you kind of a little bit profit taking, or or just some selling. So then you were stepping back a little bit, but overall, then the market was picking up pretty well on Friday, even though things were not that bad. That tells you that the volume, the popular have some support, and things are not that bad. Especially 3 days winning streak is really kind of saying the market was having support and rebound, and it tested high. Unfortunately, Thursday that it was down. So and then the other part I want to show you really quick is this. It looks like this is. Can you guess what this is? It looks like it is a Dow Jones Industrial Average index, but it's not. This actually Bitcoin price for a year or so tracking. I didn't have a period there, but the point I'm trying to make is if you can see that it was actually have volatility, in Bitcoin itself, and at the time that was low, it was about $29,000, and as a peak time was 60,000. But that takes quite a bit of time to to hit to that point, and you drop all the way down to 29,000 again, and go back up to 60,000. Now this time you see the similar play again. You drop again, but not as steep as 29, but stop at 36 around. And then now we rebound back. So if you look at the technical perspective of this thing, what you're trying to say is once it's go up and maybe you dip a little bit, fluctuate a little bit, they may actually reach another high, from a technical perspective, will try probably around 40-ish to 50,000 level again for Bitcoin, because you can see that couple of spot there that hitting the 50,000 point, and it will actually before hitting that it was actually hit the low and a rebound back. So for those of you who are worried about Tesla, stock have been really like similar to Bitcoin. It was like $1,000 drop to $9 up, 930-ish, gone back up and then come back down, and then announced earning. Despite a very strong solid earning, but then because of the truck had to be delayed due to the shortage of chips, the stock actually hit around, hit back, dropped back $100 to 830. Now it bounced back 930 again. I think if Bitcoin come back up, you probably potentially hit over 1,000 again for Tesla for just a short-term period. Because for the long run, this stock may be still pretty good, and maybe they can do the split again. That will bring the stock back up again. Then the other next picture I want to show you, just very quickly recap it, is the job opening. You hear a lot in the social media and the markets, and whether it will or not. And this is from a neighbor Barrow statistics showing that in 2002, you have roughly 5.5 million job openings. And this is all over the United States nationwide. And then you can see the 2008, but remember that, the stock market crashed. So you have a layoff and all this stuff kind of melt down. And basically, then you can see why job dropped into 2 million. It's really because of layoff and cutting people's job. And naturally, the economy started bouncing back till then. And then you can see that during this time of pandemic, again, there's a lot of layoff, unemployment very high, over 15% or so. It actually then at that point, the the open job is really slipped a lot to back to 4-ish million. But then, recently, because of the, people blame about Omicron, the COVID, and also, Biden will say want to increase the salary and everything. So then the labor market got tightened with, with a surge of labor costs on those, people work for Starbucks, Walmart, and so on. So you can see that they continuously indicating the huge gap there. And I can see the point, right? If you work $10 an hour, you only work part-time or even full-time, but you don't get benefit actually because you're paid so cheap. Omicron actually really bother you because you get sick, then you have to go to hospital or really go see a doctor or whatnot, and they don't really want to work the rest. So I give them respect on that. And at the same time, this number also indicates some office job, but it's very difficult to kind of separate them out. And really office job, I look at it, at least from a couple of areas like accounting and finance, actually the pay was much lower than pre-pandemic. I mean, a lot of companies really cut these called overhead job, right? Not of operation support. It's like just a support role, but not an actual operation job. So then, the pay was a lot lower, or they continue to shifting job to India or Philippines. So the market was still very tight on office worker job, and the pay unfortunately actually going down. We're facing off an inflation. So I mean, you can hear the people, depending on who you talk to, people who have a job and probably get a bonus by now or a merit increase, they were happy probably, but they still don't think catching inflation. But those people who got laid off, already got a job, of course they are also happy, but they would say they actually have to pick a huge 20% plus pay cut, which means that they actually have to cut spending. And regardless, if you look at the spending in America, still stay very strong. Part of it is inflation. I mean, something worth $1, you still have to buy $1.20. And so volumetrically, I don't see volume if actually increase or decrease, because a lot of time trackers only by dollars value, and the dollar office is going up, meaning that despite the volume may have decreased because of the challenges of people getting paid or actually, the purchase power decreased, the total actual aggregate dollars was still up. So that's just how the government argue the market was still very strong. And obviously, oil prices hiked up $90 lately, so that's another, oil really is a must here because people driving, so it's really a big challenge there. Just want to do a really quick recap just to highlight what happened for the week. And before I do that, I want to also tell you very quickly the technical piece of these index. So Dow will actually probably going to challenge. I mean, if you look at where they are at right now, they will, if they move it up, then you'll probably target the 35,997.12 as the next upside target. The closest below the 10-day moving average will be 34,816, which is actually lower than where we are showing here. And the crossing point will be 35,637.23. So we would probably, if you lift up higher, we're probably hitting 35,600, then we'll try to go to 36,000 again. So the first support again is 34,816, which is 200 points lower than that. So let's see how well things stand. And then for Nasdaq, for S&P 500, the average 50-day average crossing is 4610.85, so which is about 2.5% higher than where we're at. And then 10-day moving average crossing is 4443.02, roughly that, because this is like a couple of days early of calculations. So again, we will see if it's pretty fair, the upside down and the downside, with pretty much similar, range there. So we'll see how it goes. And so Monday, you're picking up the previous Friday, the Friday before, it was very strong. The market's upticking. Stock 600 is open high in advance. Asia market was up. Hang Seng Index was also Friday, which is after the Chinese New Year, the Year of Tiger again. Wishing you this year of Tiger, good health, prosperity, wishes come true, can travel again freely without worry about pandemic. People actually much better off this year than last year. That's really my wish, and most importantly is right now there's so much tension with the world of Russia. I hope there will be well peace and well contained. Things can be solved by negotiating, or not doesn't need to be forced and kill people like. So again. So then they were really good. And when Hang Seng Index opening up, trying to catch up the U.S. market, even though the week you still say percentage was still up, some Chinese stock actually went back up quite a bit. So they, for example, Tencent and then Alibaba. So then they went up 771 points solidly. And we will see if Monday, when went on Sunday, we'll see Monday if it's advanced, continue to see the momentum and pick it up. And also the Beijing Olympics seems to create some harmony. So I really look forward to for this harmony and things, you really create, a positive momentum and drive the market up. And then AT&T slipped, unfortunately, because of the earning wasn't as great, and UPS actually went up because of the strong solid earning that beat the estimate. Then S&P 500 Tuesday also led up, and mostly by energy and cyclical stock. ISM manufacturing data for January showed a decline to 57.6. Both ExxonMobil and also reported very strong earning. Wednesday market have more volatility, was up, but then because of Facebook disappointing earning, the market drove lower. But then you also covered by later on better than result from Alphabet and Advanced Micro Device, so it kind of offset in it. But still, the market was, it's kind of slipped a little bit. And then Thursday was not good because of falling from the Facebook disappointing earning. Nasdaq dropped by 3.7%. Dow Jones slipped 1.45%, which is what I covered from the opening in the beginning. Energy and financial were also in wet, but not down as much. And then Friday, the market, even despite the yield curve up to 1.8%, the market original at the very beginnings, early sections and the futures were down, but then it got picked up probably because of by the dip theory or expecting some more earnings they cut, and the Amazon strong earnings start to, investors start to looking at thinking, the high tech sector is very resilient and oversold, so then you kind of pick it up, and hopefully this momentum will continue. Reaching out Monday, with the Asian market reopened, then people started chipping in. The financial funds manager were also putting some money in, not only in the Asian market but also the U.S. market. You may actually go better. Crude stock fell by 1.645 million barrels last week. Gasoline inventory rose by 5.816 million barrels. Wells Fargo still thinking, the oil price will be very bullish, and actually will be probably going back up because with spring starting and the demand will be picking up. And then last thing is the U.S. trip actually reinforcing NATO and NATO alliance in Eastern Europe because of the Russian military build up. So again, hopefully, I hope they won't create any international unrest, and actually things will get resolved with Putin talking to Chinese president and all these things going on that changing people's mind. So again, that is the biggest risk out there right now, a geopolitical risk, which I can't forecast that. And that will creating an outbreak of oil. For those who listen to my video, know what I meant. And also the other thing is hopefully Biden's still trying to push it for that. Unfortunately, the BBB plan wasn't executed and pushed through, but I think he still want to try to at least gain something out of that. So then you have some more extra cash on the side, and then the other piece would be, we have to look at the Fed tapering and the unemployment number. If it's get worse, maybe they will push it back, delay. But currently looking at probably in March, the interest rate will be rising first time. And then want to go through this thing, which is the very highly focused for this time. These are the stock that actually currently stand on Friday. So let's talk about Snap. Snap was a rival for Facebook Metaverse. Metaverse didn't perform well, and then Snap came out with earnings after that. They actually beat estimate, so then it really benefited them. So they actually raised 50% in one day, which is kind of outrageous. But because they really get beating up, if you look at a lot of high-tech stock, Snap have been at $75 and a 52-week high, and actually at the point they were staying and dropping to around 40-ish and standing there very firmly. But then with the market last 2 weeks not this week, but the previous 2 weeks sell off, you're actually pushing the stock down to 20-ish, which if you do the mathematical calculation 40 over 70, that's pretty much it's like 45%, discount. So it's really, Snap actually making money. So they turn things around and reporting better. So then, some people just start picking it up. So you gain that much. So I still think Snap, if you believe, this is the future, people love that kind of technology, or you have a lot of subscribers continue to grow, then this may be a company go. A lot of these companies, again, the way to make money is advertisement, just pay money. And the Metaverse, unfortunately, had a lackluster fourth quarter, missing Wall Street expectation for bottom line and coming just over the consensus estimate for revenue. Earning at $3.67 per share were down 6% from a year ago. Missed analyst forecast of $3.82 per share by about 4%. The company said this is all blame Apple for the ISO operating system change that really hit the sales this year by roughly $10 billion. The stock actually had, after the announcement, dropped as much as 27%. So the stock have been talking about Metaverse, which is really great investment. But you have to look at history of Facebook, that when they first went IPO, it was $42, and then you drop next day, then you get to file a lawsuit. And for those people who lost to them, probably holding the stock and sell them, they actually be very pleased and make money. So I don't know if the case actually won or lost at the end of the day, because these investors actually, if they hold the stock, they actually gain a few times more than probably the lawsuit money for. And then you continue making money with the WhatsApp and Facebook advertisement and so on. The company actually will grow in such a big, basically 10 times you look at it to $300, almost $400. But then you because of the announcement of the earning, you drop a pretty bit up so much. So from this perspective, this stock from a high end of the, of the 52-week high and do the mathematical calculation, is giving you 30% discount right now. Now, is the stock value over value? It's very hard to say. But you have to look at the future, which is the Metaverse, how many years you have to invest in, how they're going to continue to gain the advertisement. That's why, their competitor actually benefit from the announcement, that they were impacted by the OS from Apple, that news, and actually, when the competitor actually announced pretty good earnings, they actually rebounded much stronger. But I bought some Facebook last Friday after the dip, dropping down 28%. So we'll see how it goes. The next one I want to talk about, Apple. Apple definitely is very strong and has the largest single quarter in terms of sales ever, bringing in $123.9 billion, up 11% from the previous year, and beating Wall Street consensus estimate for $118.5 billion by 4.5%. First quarter earning at $2.10 per share, topped also the estimate of $1.89 by 11%. iPhone sales of 71.6 billion were up 9% year over year in top estimate. But iPad revenue was down. Well, part of it is because most of the people pay iPad a lot of time for the children, for the kids playing it. They don't exchange it. It's such a fast version like iPhone. People who always want the top of the line of the product. So in Apple, again, just bear in mind, probably 3 weeks ago, before the market starts slipping off, they will actually hit $3 trillion valuation mark, and which is about $182 a share. And if you look at the last time when they hit the $2 trillion mark, it's a similar reaction that the market, a lot of people were selling off. I mean, they take profit taking, they think it's too high. They want to take the profit, so the stock slipped. So, and they were standing about 160 lush for quite some time after the split and push it to 150 plus. Well, that's what happened to the split, and they push up a little higher and they stay there. Then they push up 160 lush, they stay there. And now the next level, 182. So this stock have to be, if they don't move, they don't move. But if they move, they'll move it quick, it'll be up. Very resilient, and the analysts, which have some analysts expected that the stock will be $190 as a target. So I still think Apple will be a good one to do, but very hard to say if the market continue to be suppressing. They may down another 10% with $17, then back to $150 level again. Just bear that in mind. The next one, Amazon, again, is also very, very strong. Earning with $27.75 per share, crash estimate of $3.44 per share by so many percent, and really represent 95% year-over-year growth. Big factor for the huge profit is the $12 billion on purchase of $1.3 billion in stock of the electric car maker Rival Automotive. before its IPO in November. So they made money, a lot of money, chunk of money from that. Also, Amazon say expect sale from 112 billion to 117 billion in the first quarter, which is below the consensus estimate 120 billion, but still have growth. It's also announced, which is very amazing, why the stock actually up by 13.5% before the good news. They were surprised the market by announcing a 20-for-1 stock split. So Amazon right now is pretty expensive, $3,000 a share. You can only get it probably from Robinhood, which can buy fraction of shares or maybe some other smaller application, but the traditional, trading company just wouldn't do that. So now the split will be benefit from people who actually want to looking to buy Amazon. So I think Amazon after split may have momentum to push up a little further, which a lot of times the reverse split is really when the company is in financial trouble, not looking good. And the perceptionally for this type of split is always kind of favorable to the market. Well, there's some exceptions, Ben, that you might know. But Bank of America also named Amazon top pick for 2022 in his note, say Amazon should enjoy a significant expansion profit margin from 2023 to 2025, helped by its cloud advertisement and third-party marketplace. So I definitely will look into Amazon after the split, because right now it's just super expensive. I don't have that much money to buy, but but all of that is another one that will continue to stay. And you have to remember, don't think about the traditional business Amazon. Now they're more into cloud business and third-party marketplace. Microsoft is another good one. They announced solid earnings, although the stock has slipped. And the earning due to continuous growth of cloud business and upgrade of Windows. The stock was a 52-week high actually end of December when and actually it's as low as January 25th. It got beat up below $300, $288. So if you look at it now, push it about $300, it may be very strong and resilient, sustainable there. The next month, if you push it up, I look forward Microsoft to push it back to $330. Again, you have to look at the crash back to 2008. What was the price of Microsoft back then? And Microsoft had some rough time too, where the market share, the stock actually have gone down a lot. But then through time, you've really proven to you that, and in fact, Windows is very popular. You can't really, the people who are in business, this application really you cannot go away. So I look forward to them continue to spend. I don't know if Xbox they make money or not, but that's another one that's just a grow business. And there's just bought the Activision, another video game company. So in the future, I think they will continue to look for opportunity and acquisitions that will make the company continue to transform. So the other one not on the list is Netflix. Definitely need to look at that one. The video streaming service reported an earning of $1.33 per share, down over 5% from a year prior, but 61.5% better than Wall Street consensus estimate for 82 cents per share. Revenue of $7.7 billion was still 16% higher than a year prior, about in line with Wall Street expectation. The company, the amazing part was at the 8.3 million users, but it's still below the internal target 8.5 million. Right now the challenges, however, was they were saying the first quarter subscriber probably only increased 2.4 million compared to a peak of 8.4 million. So not because of the earning not doing well, but again, stock market is always a look forward thing. So then if they say, oh, my revenue may not be as good going forward and the outlook and new revise, that's actually take a hit of the market. So then, it was actually one day was slip $130 from $450. Let's show $500 actually. It dropped to $380. So I bought a little at $380. Now, last week on Wednesday, it was got back to $430, and then it ended the week with $410. So Netflix, I think if you hit $500 in the short term, which is really amazing, depending on the market momentum, it's still lower than where it was before the sell-off of 2 weeks ago. But then that would be a good position to try and sell for the short-term gain. That would be a good position to sell if you believe that the stock is going to worth more than $500, because some analysts say there's way stock overvaluation. But again, they make good money. If there's a really good movie out there again, of a TV like Squid Game, then they may hit again. And then the last one I also want to mention about is Google. Google also very strong and market leader after reporting a stunning fourth quarter result after market close Tuesday. Revenue of 70.5.3 billion was 32% higher than a year ago. Top Wall Street expectation 71.8 billion by 4.9%. Earnings of $30.69 per share, 38% higher than prior year for $27.28 by 12.5%. You really the earning is really coming from cloud computing sales, which climbed more than 45% from the prior year, and also YouTube advertising revenue also saw 25% year over year. So Google is another big engine machine that you think about will be, just like Chinese Baidu. Unfortunately, Baidu stock have been really struggling with a high end of $250 and a 52-week low drop to $140 in the U.S. market. But I still thinking, at least, if they really doing what they're supposed to be doing and they can definitely continue to go up with Chinese support, now that these two big companies that they want to crash or whatever the regulations, they will kind of loosen it up because the economy need to continue to grow with different strategy. Then you may actually go back up to $200 a share, hopefully. Alibaba also will eventually maybe moving up. Like I said, this is just beginning of year target. A lot of time when the market just reopening, there have to be momentum and things that Chinese government will push it a little bit forward because you want to have hope, you want people to be happy, you want people look at this year that things will turn around and hopefully the pandemic will go away. So before I shut it off, another thing is just bear in mind that I still holding these travel stocks, CCL, NCLH. CCL dropped to $16 with this market pushing down with all the index were down over a lot, and but then they rebounded back to about $20. So again they were $33 at the high end. NCLH was also $35 high end. They pushed down to also around $20. So these are still the opportunity to buy at this moment if you believe in the long-term range that cruise will resume and normally. The other thing in United Airlines also you can see you push it down as low as $41 and you come back up at 43-ish again. Still again pre-pandemic they were at $92 just barely much. So I mean if you look at these high-tech stock can go up 5 times, 10 times, whatnot. These companies which are fundamentally people still have to go to travel. So airline, definitely United Airline may not be cruise because that's more entertainment purposes. Then you will actually seeing the improvement there once this pandemic is over or people not fear about that as much, right? And then the other thing is Disney. Next week will be announcing earnings, so it'll be very interesting to look about how things going to shape up on that one. Maybe their theme park still not doing well, but again look forward to it. They probably say they for the pandemic that eventually will be get over with. Things will be better, and also the streaming business, see how well they're doing. And also I still have bowling. I still think once plane resume traveling, then the more plane will be selling. Also they have a lot of write off on the 737 issues. So if that's more from an accounting perspective, reporting earning perspective. So eventually they write off and reserve the things about it. They may have to write on, which actually on the quarter the financial will be reported stronger. Again, pre-pandemic prices is $450 in bowling, so you're looking for in the long range you can look at about a double, right? If you come back, and also pharmaceutical stock have already hit a pretty bad. Moderna have dropped so much, so I still pick Pfizer, which is $52 right now, not too bad, and there's still opportunity that you go up. But if the pandemic is over, nobody gonna vaccinate it anymore, then you knew that this stock probably point us to hold it, because it's not going to shock the way that that was like other pharmaceutical stock. But then CVS, and these stock probably still benefit from giving free COVID tests, so they may actually boost up. So Cisco, CVS, Coca-Cola, Enbridge, Tyson, Pfizer, Disney, Uber, Twitter, Peloton are going to report earnings. So these are the stock that if they're reporting right, it probably help the similar industry stock in the similar industry also gone up. So you'll be interested to see how the index is going to perform. Futures currently right now in mix. Dow Jones was down Nasdaq is up, and S&P 500 is also up, and we also have to look at it, how Asia performance is going to be, whether Hang Seng Index will continue to pick up the momentum. 770 points up in one day is very significant. So if they will push up another 700 or maybe another 2.5%, back to the 25,000 level, they will test another new high. That could be a good news there. So also job market seems to be in US is still stronger than expected. So we'll see all these elements, how things combine together. But I really hope that still with harmony of the Beijing Winter Olympics and the momentum continue to flow through, that people realize it was really oversold with all this. A lot of companies reported stronger and solid earnings and very resilient. We'll see another good momentum driving up there, and before you come back down maybe in late February or March, and I'll keep you posted on that. And hopefully everybody will make money. And if you have questions, send me an email. Again, also I'll recover from COVID now, so fully recover. Again, it's not fun to be sick. The first 4 or 5 days really, really bad, but you really take longer than 5 days to recover. And 7 days I took tests again, I was still positive, but after that, I rested a few more days and took the test and get negative. So you just have to research on your own, and the rest, drink a lot of fluid. There's not much you can do about it, but rest and drink a lot of food and eat healthily. Then you actually will regain strength. So hopefully everybody can, don't have to suffer through that, because again, the Omicron is very transmissible. So just continue to make sure wash your hand, watch for hygiene, be careful of people around you. If you get sick and showing symptoms, make sure you get tested so that people around you, your friends and your family, won't have to suffer of sharing your pain. Have a nice and wonderful week. Hopefully year of Tiger will be a strong year, and Tiger normally is very fierce and strong, so our health will be just like that. Thank you.